Welcome back, everyone, to the channel. I hope all of you are having an amazing start to your week so far. Today, we have a very important update to discuss regarding Cardano ADA, Bitcoin, and the overall crypto market, because despite prices pulling back slightly, we are finally starting to see a few positive signs entering the market again. That is something investors desperately needed after the volatility and uncertainty we experienced recently. Now, hopefully this positive momentum continues throughout the rest of the week, but there are still some major things happening behind the scenes that traders absolutely need to pay attention to. In today's video, we are going to break down the latest market manipulation concerns, the massive liquidation event that shocked the crypto market, the critical support levels ADA must hold, the latest Federal Reserve developments, and why this week could become extremely important for altcoins moving forward. This video is for educational and entertainment purposes only and should not be considered financial advice. Always do your own research before investing in cryptocurrencies or any financial assets, as the market is highly volatile and risky. Now let's start with what everybody noticed immediately as the week began. Prices across the crypto market moved lower once again, and at first glance, many people assumed this was simply another normal correction. However, when you actually look deeper into the data, what happened does not appear normal at all. In fact, what we witnessed was another major leverage liquidation event that took place in an extremely short amount of time. During that sudden drop around 6:30 Central Time, which was approximately 7:30 Eastern Time, Cardano ADA experienced a sharp decline of nearly 3% almost instantly. But what really caught traders' attention was not just the drop itself, it was the amount of liquidations that occurred during that brief moment. Roughly $600 million in leverage positions were wiped out during that move, and that simply does not happen under normal low-volume market conditions. This is why many traders and analysts are once again pointing toward heavy manipulation inside the crypto market. We have actually seen similar situations happen before, especially around weekly market opens and key trading sessions where volatility suddenly appears out of nowhere. What makes this event even more interesting is that it happened just before the new weekly candle officially opened. It almost looked like an intentional attempt to create panic, force liquidations, and inject fear back into the market right before traders entered the new week. When you look at Bitcoin's chart, the move resulted in a large bearish engulfing candle, which immediately created more uncertainty across the entire crypto space. As soon as traders saw that candle form, fear quickly returned to the market and many investors started questioning whether another deeper correction was about to begin. Now, despite all of that negativity, the market actually held up better than many expected. Yes, Cardano ADA started the day lower and Bitcoin also slipped slightly into the red, but the overall damage could have been much worse considering the scale of liquidations that took place. ADA was down roughly 1.3%, while Bitcoin dropped close to 0.9%. But the most important thing right now is the technical structure that ADA is fighting to hold. Cardano is currently sitting at a very important upper support region, and this is actually the first major retest we have seen since the breakout structure formed previously. If ADA can successfully hold this area, then there is still a strong possibility that the bullish market structure remains intact. However, if this support level breaks down, then the market could be setting itself up for another ugly and painful week ahead. This is not just about Cardano either. Altcoins across the board are currently sitting at critical support levels. The entire altcoin market needs to maintain structure right here, because once these levels fail, momentum can shift very quickly to the downside. We already saw leverage get flushed out of the market during that sudden drop. Large positions were liquidated, assets were rapidly moved around, and traders were forced into panic selling. Now the market finds itself entering a brand new week in a completely different price zone compared to where many expected it to begin. The good news, however, is that this week does not contain the same overwhelming amount of macroeconomic pressure that we dealt with last week. Previously, we had major inflation reports, political voting developments, and several economic events all hitting the market simultaneously, which created massive uncertainty for both crypto and stocks. This week appears to be a bit calmer on the surface, but there is still one major event investors need to watch very closely, and that is the upcoming FOMC meeting minutes scheduled for Wednesday. This could become one of the biggest catalysts for market direction during the week because traders are looking for clues regarding the Federal Reserve's future plans on interest rates and monetary policy. Remember, the last Federal Reserve meeting showed signs of division among officials, and many investors are now curious to see exactly how split the voting process really was behind closed doors. The meeting minutes could provide valuable insight into what concerns the Fed currently has about inflation, the economy, employment data, and financial conditions moving forward. More importantly, investors want hints regarding the next FOMC meeting because expectations surrounding rate cuts and monetary easing continue to play a massive role in crypto market sentiment. If the Fed appears more dovish than expected, risk assets like Bitcoin and Cardano could respond positively. But if the minutes reveal stronger concerns about inflation remaining elevated, then markets may react negatively once again. Another important development worth discussing is the latest fact sheet released by the White House. While many investors initially overlooked it, government-related crypto developments continue to become increasingly important for the long-term future of digital assets. Regulatory clarity remains one of the biggest issues facing the crypto industry today, and traders are still waiting for more progress surrounding legislation like the Clarity Act. Many market participants are now closely watching the Senate to see when further voting discussions may officially take place, because these regulatory decisions could have a huge impact on institutional adoption and long-term crypto growth in the United States. On top of all that, another headline making waves throughout the crypto market involves a massive Bitcoin whale position that was recently opened. Reports indicate that a trader opened a $67 million Bitcoin long position using 20x leverage. That is an enormous amount of leverage, and it immediately caught the attention of the market. Because if Bitcoin drops toward the $74,000 range, that position faces the risk of full liquidation. This tells us something very important. Despite all the fear currently circulating in the market, there are still large players aggressively betting on higher prices. Some traders clearly believe this recent drop was heavily manipulated and not truly driven by fundamental weakness. Honestly, when you look at the scale of the market reaction compared to the actual news that triggered it, the sell-off does appear exaggerated. We have seen this happen many times throughout crypto history, where sudden fear events create temporary panic, liquidations cascade through the market, and then prices eventually stabilize or even reverse back upward once the manipulation phase is complete. That does not guarantee the market immediately recovers from here, and nobody should blindly assume prices only move higher. But at the same time, the reaction we witnessed simply did not seem proportional to the actual news environment surrounding the market. Right now, everything comes down to whether Cardano ADA and the broader altcoin market can maintain their current support structure. If ADA successfully holds these levels, confidence could quickly return, and traders may begin positioning for another upward move. But if support fails, then downside targets around the lower 20-cent range suddenly come back into play, and that would likely create much more fear across the market. This is why the next several are going to be extremely important for crypto investors. As always, we are going to continue monitoring every major development throughout the week, including the FOMC meeting minutes, Bitcoin price action, Cardano support levels, and any new updates surrounding crypto regulation and the Clarity Act. So make sure you stay locked into the channel because we will be covering everything as it happens in real time. Thank you all so much for watching today's video. If you enjoyed this update, make sure you leave a like, subscribe to the channel, and share the video with other crypto investors who want to stay informed during these volatile market conditions. Drop your thoughts down below in the comments section and let me know whether you think this recent crypto drop was genuine market weakness or another case of manipulation. Have an amazing rest of your day, and I will see you all in the next video.